In this video, we're going to highlight changes to tax law and contribution limits being effective for the year 2025. We're going to begin the discussion with changes coming out of Secure Act 1 or 2.0 and then transition to changes in contribution limits. So what's notable coming out of Secure Act 1 or 2.0 for this year is three things. The first would be automatic enrollment and long-time part-time employees becoming eligible for retirement plans. The second would be increased catch-up contributions for those that are ages 60 to 63. And then the third would be RMDs for inherited retirement accounts. We'll talk about each of these individually. So as it relates to automatic enrollment, define contribution plans. Think of your 401k or 403b. Those that are established after December 29, 2022 must have an automatic enrollment feature. So they're automatically enrolling their employees to contribute to these types of accounts. And you're going to want to refer to your summary plan description to see the exact contribution percentage, but probably going to range between 3 to 10%. So double check on that. But overall, this is a big win as more Americans are going to be contributing to retirement plans. As well, there's changes affecting long-time part-time employees. So those that have actually worked part-time for over 500 years, so at least 500 years for 2 consecutive years and are 21 years or older, should now be eligible to participate in 401k or 403b retirement plans. So more part-time employees will now be able to contribute to retirement accounts, which again is a positive. As it relates to increased catch-up contribution limits, those changed for 2025 as well. So the rule has stood up to this point. If you're age 50 or older, you get a catch-up contribution of $7,500 to your retirement plan. Well, they now changed this to where if you're age 60, 61, 62, or 63, your catch-up contribution limit goes from $7,500 up to $11,250, but it's only for those specific ages. So if you're that specific age, then you get an additional $3,750 that you can put into your 401k or 403b plan or something similar to that. They also impacted simple plans as well. So the catch-up contribution for simple plans was $3,500 for those that are age 50 or older. Now, if you're 60, 61, 62, or 63, you can put an additional $1,750 for a total catch-up contribution of $5,250. So again, it's just for those specific ages. You can put more into the retirement plans. Now, as it relates to RMDs for inherited retirement accounts, this is going to depend on a couple different things, right? What I'm speaking to specifically here is those that inherit a retirement account from someone that passed away after December 31st, 2019, right? So someone that passed away in years 2020 or later. And the rules were fluctuating depending on whether they had to take annual required minimum distributions, because coming out of the original Secure Act, they eliminated the stretch IRA to where if you inherit a retirement account from someone that passed away in 2020 or later, and you're a non-spouse beneficiary, so say you inherit a retirement account from a parent of yours, you have to withdraw the retirement account balance within 10 years. And they were trying to decide during that 10 years if you have to also take annual RMDs, required minimum distributions. And now for this year, 2025, they're enforcing the fact that if you inherited a retirement account from someone that was taking RMDs at the time of or prior to their passing, you must also take annual RMDs. So what you need to know now is if you're a non-spouse beneficiary that inherited a retirement account from, say, your parent, and they were taking RMDs at the time of or prior to their passing, then you must also take annual RMDs and withdraw the balance within 10 years. So that's kind of the main summary of that. Now, transitioning to contribution limits, we're going to first talk about the HSA or health savings account. The 2025 limit for that for the minimum deductible is $1,650 for individual plans and $3,300 for family plans. The max out of pocket for 2025 is $8,300 for individual, $16,600 for family plans. And again, you need to meet the minimum deductible and max out of pocket for it to be considered a high deductible health plan to contribute to the health savings account. So important to be aware of these limits. And then the final thing is how much you can contribute, right? So for year 2025, individual HSA plans can put in $4,300 and family plans can put in $8,550. If you're age 55 or older, you do get an additional $1,000 catch-up. As it relates to Social Security, millions of Americans saw a 2.5% increase on their Social Security benefit, and then the wage base has gone up to 176,100. In other words, once your income surpasses $176,100, you're no longer going to be paying Social Security taxes. So the last contribution limit changes refer to retirement plans. We'll talk about the 401k, the 403b, the 457s first. Your contribution limit as an employee, so an employee contribution to this plan has increased to $23,500 if you're under the age of 50 years old. If you're age 50 or older, you can put an additional $7,500 catch-up or $11,250, right, if your age is 60 to 63. And then as it relates to some other types of retirement plans, so simples, the employee contribution limit would be $16,500, and then you get the $3,500 catch-up if you're age 50 or older. But again, if your age is 60 to 63, you can put even more of a catch-up contribution of $5,250. And then the last would be traditional and Roth IRAs. Those limits did not change for 2025. They're going to remain at $7,000 with the additional $1,000 catch-up if you are age 50 or older. So hopefully this was helpful. If you want to click the top right of this video, you can check out an article that provides more detail on this topic. And thank you very much, and we'll talk to you soon.